What's up, everybody? Bueller here again, and today I'm going to be doing the TA routine on SPY, so everybody's on the same page going into this next week. And I cleared my chart just for all literally on the same page, square one. But I'm going to start with the price level tool. Just going to start on the daily time frame. And remember, when I'm doing this time frame, I'm doing the daily time frame for the smaller time frames. When I do the bigger time frame analysis, the levels I'm going to be grabbing are coming from the weekly or the monthly. Most of the time, it's the monthly though, so no need to confuse it. But let's go ahead and start. So current price is about like 405.60s-ish. So probably start about down here somewhere and finish off around here just so we get a good amount of levels on both sides of the current price. So we'll start a little bit above this here. But you guys know me. I like to mark all emerging candles. An emerging candle, again, if you don't know, is basically a breaking spot for price. But I'm basically just marking the top of every green candle. If a red candle occurs like this, perfect example, pops up, then I'm not going to go over here and mark this one, and I'm not going to mark the top of that either. I'm going to just keep going. And a lot of you may know this already, and that barely passes that. Whenever we have a large range, like let's say like right here, like it's not really fair to say, oh guys, above 367, so let's look toward 370. I mean, that's a $3 move, right? So in some cases, it's nice to add those ranges. But for example's sake, we'll just keep going until I find a bigger one. Like right here. Like, it's not really fair to say, oh, above 370, 388, target 379. So you really need to go down here, add a Fibonacci, and don't let it confuse you. All we're really focusing on is the halfway point of this range. It's nothing crazy. It's just to give us an in-between level that we can trust. And just keep doing it, going left to right. I always start left to right just to kind of get things going from price history. I don't really like to start from current price. But again, if you do current price, it's pretty good. I'm not going to sit here and say, oh, it doesn't work. But this is just how I do things, so... So here we go. We have that's not a bad range. This is a range we could maybe fix up, though. And this is just all of your bigger time frame levels to help you out on the smaller time frame. Again, we will also add the previous day high, previous day low, pre-market high, pre-market low, previous day open, previous day close, and then like 10, 15, sometimes 30 minutes, sometimes later on, you can also add the current day's open, which is very effective. This is where things get a little dicey now. Tons of levels to add real quick, so we're just going to smack all the emerging candles on real quick. And by the way, if you're wondering how are you clicking those so quick, go to your cogwheel settings here. If you go to Snap Drawings 2 OHLC, click Apply, then click OK, you can actually snap your clicks really easily, a lot quicker too. And everyone was always wondering, like, where are you guys getting that 400.60s? I mean, that's an emerging candle, guys. You know, a lot of people were impressed by that level last week. That is a pretty known level, so I'm going to add that level there. It's just cool, too, to go back and see, you know, oh, crap, that was the level here. It's from 2020, 2021. You know, just seeing just how effective price history really is. All right, so we got a pretty good amount. Let's keep, auto zoom back out. I messed up. Zoom in. We could probably add one here, maybe one here. I'm just going to keep going, though. And we'll add that one. We'll add this one, and then we'll do a halfway range to finish it off. And then we'll go see what it looks like on the smaller time frames. Oops, that's not what I wanted. Sometimes you gotta worry about that too. Remove drawing, and then let's just go to the 5-day, 5-minute. You could see all kinds of TA. Of course, it's nice to go back to and just kind of back test. Oh, what's going on, or how did things play out that day? But just make sure next week that you also highlight the previous day high. And if you have to ask, just go ahead and mark both the wick and the meat. Get it right there. And this is gonna be an area we have to look above in the future. The previous day close is right here. So we'll probably watch around this area as well. That'll be a good little median area to watch besides the 406 to 406.50s there. And then the yesterday's open, which will just go down to the 403.50 and highlight that as well. So let's say price starts off down here. All right, well, then we look under 403.50. With continued rejection of the previous day close. Let's say it starts in between here. All right, well, we have a super tight initial range to watch out for, and if we get any good short-term retest, then we can play towards the outer part of those ranges. And let's say it starts way up here. All right, well, then we look over 408.50, or we can like back under this kind of median range here, as well as the previous day close to see if price wants to push back through and retest to move lower, or if it's just going to come down here for an initial bounce or initial kind of hold base build kind of move here, and then a bounce higher. So we'll pay attention to see how that works out there. A lot of people always ask, how do you get your bigger time frame levels? I'm gonna clear it. Go out to the monthly time frame, price level tool again. Current price is here, but I just like to kind of start back as far as I can, just to give myself that initial kind of practice, really. And we're going to do the exact same method. You're just going to mark the top closes of each of those green candles the first time they've ever done that. It's kind of initially what you're going for. And just go all the way to the top. Why not? It's not that many candles. And let's fix up some of these huge ranges we have here, like between 326 and 349. Oh, let me back my mouse up so I don't hit that candle. And I like to do it in between most of the ranges because it's the monthly. I mean, you're going to get pretty wide ranges here, but this is, again, looking for good patterns around these supports or good patterns against those resistances. So we'll be paying attention to that as well. We'll see what's the damage here. When we get all these levels added finally, we go back down to the daily. Just give ourselves kind of that initial view of what's going on and what's possible too. It's not really fair to sit here and say, oh, I'm bullish, and then just cover a bullish scenario. It's very smart to sit here and cover multiple scenarios. You can see we're actually pretty close to a known resistance. I mean, even if you do add just short-term price action, you're a lot of the time going to incorporate this candle here at 411.70s, just because this is kind of where we came down from the initial drop. Had a little bit of a bull trap, and then we pulled all the way back down, where you can see we've actually pulled up once, twice, and then we're up here again. So this is going to be a huge area to watch out for. In general, for bulls to pass, to move higher towards 417, 420s, maybe even 430s over time, of course, not just a couple days. If we get a continued rejection of this area or a failed breakout, we are most likely going to see a pullback down to at least 388, 390 area. And again, this is TA that can hold over the course of a couple weeks. We don't know. We got to pay attention to see what's going on. But so far, we do have a touch of that resistance. Now we need to see next week, are we going to break through that, or are we going to reject it, continue to build resistance or base against here and pull down? You know, there's a few different things. Cover both sides. Why not, right? So that's going to be my initial TA for SPY. I hope you guys enjoyed this video. It's a very short one, but it's, again, Sunday, and I hope you guys enjoyed going through that. Yes, you can apply this to any ticker. I do advise you to have a list of tickers going. You can categorize whatever settings you want, but I would definitely keep a list of tickers going, as well as the sectors. Just kind of keep an eye on what's positive, what's negative, to see really what's pushing and pulling SPY as a whole. And then, of course, a watch list, which you can see I still haven't deleted mine. But it's very nice to type it out, get your initial thoughts before the market's open. Regardless if you're taking trades or not, it's smart to go back, review, all right, what was my thought process? What was a couple things I'm looking at? What were levels that I was looking at to break out? Did I see volume past it? Did I see weakness against it? You know, just continued constant review and visualization of, all right, could I have taken a trade here? What would my stop loss, what would my target have been? Of course, using the staircase method, you know, just trying to get to that first target, get your entry, get to your first target, practice that for a while. Over time, as you build into getting more contracts, regardless of your account size, building into more contracts, you can sell most at that first target, which you'll be a lot more used to because you practice it so much with less risk. And then you could take, you know, your runners or whatever you want to call them, your farther out contracts, to a further resistance again, or further support, regardless of the direction of the breakout. But still, super important information. I would take a lot of time to just review as much as you possibly can. Too many people get into this and they do not review enough. You know, you ask them, all right, where was your stop loss at? And they're like, well, I didn't really have one. I just kind of had it on. You need to know. You need to know all this info before you're in the trade. Therefore, when you're in the trade, you don't let your emotions sway you as much, because you're trading with decision, with facts, not with, oh, this is what I thought or this is what I felt. Or I just, you don't want to get any of that. You want to have a good, clear view of what you're doing, so you have a clear plan while you're in it. And this also helps out with your review afterwards. So hope you guys enjoyed this video. Yeah, let me know in the comment section below if you want to get some more TA videos like this or not, but I'll see you guys tomorrow.